Hi, and welcome back again to Tim Biggam's Options and Volatility newsletter for February 28th. Hard to believe we're at the end of February already. Certainly, everyone wondering when this market sell-off will end as we finally broke support on the S&P 500. So here's that chart we've been talking about for a little while. That trend line that has been in place for well over a year and a half finally gave way. We'll see if this is a low or not on stocks here going forward. Certainly the S&P getting oversold on every technical metric. 9-day RSI basically at the lowest level of the past year. You can see previous times, right? It did mark significant kind of short-term lows in the S&P 500. MACD also at the lowest level basically all year. Bollinger percent B went negative as well. The previous times these aligned in a similar fashion did mark, as we talked about, significant lows. And we're seeing the VIX now pushing towards the highest level of the year and towards that spike here, which marked a low in stock prices. So we shall see. Speaking of the VIX, it did close above that 20 level. This morning down a little bit as stocks are up slightly, but certainly well above that $20 level, the highest level of the year. As far as unusual option activity, taking a look at Golden Ocean Group, GOGL, which normally doesn't trade much options, yesterday saw this enormous volume coming in post earnings. Earnings came out already. We can see what happened since the lows on implied volatility just off the charts here high, right? You can see the volume yesterday, over 17,000 March options, almost 10,000 Aprils. You can see implied volatility at the money. Implied volatility almost has doubled in the past couple weeks. So that sets up ideally, I think, for a trade in GOGL. Again, it came out with earnings that were, fine, nothing, spectacular here, but it was one of the few stocks that was up yesterday. So just going out and doing a simple buy right because of the low price stock, buying the, covered stock here. You can simply follow along with that bullish call buyer, sell that slightly out of the money, $10 call. The stock closed at $9.85 for about $9. So if you do get called away, have a very nice 11% or so return. You can even move out to April, get a little more premium, but not much. We're also looking at, for the Cobra, doing a time spread, buying the April 10s, selling these overly expensive, a 74 IV, paying over a 56, both shot up, but the Marches shorter term have seen the bigger volume, paying pretty much just around 15 cents. So we kind of like that loss as well. So until next time, as always, here's the good trade.